Good evening, this is Money Matters. My name is Anthony Wilson.
And I'm Judy Kanhai. In this week's program, Managing Director of Republic Bank, Nigel Batiste, justifies the level of fees charged by commercial banks. This after commercial banks have come under fire for what some say are high fees and charges. And we'll talk to a former plant superintendent who worked at Methanol Holdings Trinidad Limited. He lost his job a year ago, and to date, he's yet to get another job.
But we begin with an interview with Karen Dabesi, who is a Group CEO of First Citizens. Good evening, Karen Dabesi, Group CEO of the First Citizens Group.
Good evening, Anthony.
It was disclosed over the weekend that the government actually is looking to sell an additional block of shares in First Citizens. Why do you think an investor should buy shares in that additional block?
Okay, a couple of reasons why. Firstly, the performance of the financial sector in Trinidad continues to perform, second largest contributor to GDP. First Citizens within that setting is the second largest banking group within Trinidad and Tobago and has had a very good performance from a financial perspective. Our balance sheet is just short of 39 billion TT dollars from an asset perspective. Our profitability averaging growth over a 5-year period on an average basis of 3.5% on a profit before tax basis. Even on a profit after tax basis, when you look at the growth first quarter of the current financial year versus first quarter of the previous financial year, our profit after tax grew by 3.35%. So the bank is performing very well within the environment. In addition, when you look at the performance of the share, the First Citizens share has been relatively stable in price. It trades pretty much within a band between $30 and $35. And when you look at the dips that have taken place below the $34, they have tended to be very short in span. So when you really look at the share price has been very stable in a $33.5 to $35 range. So very stable from a share price perspective. And the dividend yield, which is the analogous or the equivalent of an interest rate on a fixed income instrument, at the $32 share price, the dividend yield is 4.16%. If you look at comparable instruments, even in a fixed income space, government bond, you would have to get somewhere between 8 and 10 year duration in order to get an equivalent kind of return. So stable share price, positive performance of the institution, and a very good dividend yield.
It strikes me that the after-tax profit of First Citizens has been fairly flat since the last IPO. I believe it's less than 5%.
That's correct.
Do you think, given that flat after-tax profit performance, that it would be wise for somebody to invest at $32 a share?
Yes, I still think it's wise to invest because even with that, so when you look at the profit before tax, the growth has been roughly 3.5% on an average basis every year, so consecutively increasing. On an after-tax basis, you're correct, our effective tax rate has been drifting up, so our after-tax return has been a little bit more subdued, but even in the current environment, and even with that history, the dividend yield, which is the return that investors get, barring any capital gains on a stock, the dividend yield, which is, as I said, equivalent to the interest rate, at 4.16 is a very good return on an investment in the current environment.
I want to deal with the bank's exposure.
Sure.
Exposure to Home Construction Limited and exposure to Barbados. Can we start with Home Construction Limited?
Okay, so now we start the conversation by saying that I don't speak about client confidential information. What I will say is the Home Construction Limited facility, as all of our other credit facilities, are very well structured and are very well secured. That's the only comment that I would make on that facility. With respect to our exposure in Barbados, we have 2 subsidiaries operating in Barbados. Outside of Trinidad and Tobago, we have subsidiaries operating in Barbados, in St. Lucia, and in St. Vincent. And of course, we do have a rep office operating in Costa Rica. Barbados is the most substantial subsidiary operations we have outside of Trinidad and Tobago. But even in aggregate, depending on which factor you look at, if you look at it on a total asset perspective, First Citizens' exposure in aggregate outside of Trinidad and Tobago is only just about 13%. And if you look at it on a loan basis, it goes up a little bit more to maybe about 14.5%. So our exposure is still very heavily denominated in Trinidad and Tobago.
The Guardian newspaper reported recently that First Citizens lent the government of Barbados, I believe it's $25 million US. I know you probably would not want to comment on the loan directly, but Moody's reported last week that there is a very high likelihood of a credit event in Barbados. What's the position of new investors in First Citizens if Barbados defaults on its debt obligations?
So firstly, let's debunk the default story. Even with downgrades taking place, and we've had very low non-investment grade issuers or borrowers across the region, we've not had a situation with default within the Caribbean region. Barbados, unfortunately, is being downgraded. Barbados is going through a cycle. As we always do, we look at our source of repayment in all loans that we extend. And most of our loans that we lend to entities outside of Trinidad and Tobago also have credit adjustment rate increases. So as credit deteriorates, our risk-reward ratio gets adjusted, and the return or the interest rate we charge increases on those facilities. So with respect to any of our extensions of credit, these are some of the things that we bring into account in structuring the credit, and those would be applied across the board.
The last IPO, of course, had a problem. There's never been a public report on that problem, and therefore people are asking, why is the government looking to sell additional shares in First Citizens if the previous sale of shares remains under cloud, as it were?
Okay, so as I said, the bank did what it needed to do post the last issue. The report that was done by the regulator, that report is not under the control of the bank. That's between the regulator, the Securities Exchange Commission, and the major shareholder. We have no control over what process that report is going through. We have done what we needed to do, both as a post-event fix, as well as strengthening of the policies and procedures in the bank to move forward.
Thank you very much, Karen DeBasie.
Thank you, Anthony.
When we come back, Judy speaks with Nigel Batiste, the Managing Director of Republic Bank, about fees in Trinidad and Tobago. Money Matters will be right back.